Welcome everyone to our weekly Forex market analysis, and this is in preparation for the week of January 15th to 19th, 2018. Just a quick disclaimer before we get started, this is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so to start off as usual, we'll take a look at our Forex factory first and see what's in store this week. Now, before we get into that, the big thing, there were a couple of big things that happened last week. One was China essentially coming, there was a rumor that said that China was going to stop buying US treasuries, and China is, one of the biggest holder of US treasuries. So when you hear a news like that, that could be, well, that's really bad for the US dollar, and we saw the US dollar drop. And after that, the next thing we saw happen was ECB meeting minutes. So ECB has now started shifting their stance. Actually, they were shifting their stance last year as well, but now they were talking about giving forward guidance in terms of interest rates. So before, they were just talking about reducing their asset purchase program, so the amount of securities they are buying in the market would get cut down. That means they would be pumping less money into the economy. However, now they started talking about providing forward interest guidance as well, which means they may start raising interest rates at some point down the line. So they didn't quite come out and say when they will be doing that, but overall the message was that there would be further tightening of the monetary policy. So when the monetary policy is getting tightened, that is usually good for the currency. So loose monetary policy is negative for the currency. Tighter monetary policy is positive for the currency. So as a result of that, we saw US dollar take quite a hit. Euro went up, pound went up, everything else went up as a result of that. So last couple of days of the week, we saw a huge bullish move in everything against the dollar. So dollar this week just got massacred as a result of a couple of those events that happened. So that's to keep in mind. And liquidity is still coming back into the market. When liquidity is low in the market, we tend to see more exaggerated moves. So now that's partly the reason why we saw such a huge move. But overall, the message is that they are going to be tightening the monetary policy, which is positive for the euro and other currencies. And another thing, oil has done really well as well. That has pushed Canadian dollar up. So just keep those in mind. Those things are not technically related things. They're more from fundamental perspective here. So those are the three different things that are going on in the market. So let's see what we have in store here. Monday is a US holiday, so not expecting much in terms of activity there. Not a whole lot going on in the European session either. We do have MPC members speaking here, and we have business confidence number for New Zealand. So those will be important for the New Zealand dollar here. So we'll keep that in mind. And going into Tuesday, in the European session, we have CPI, which is the inflation number that the central bank will track. And so that's there, and we'll have core CPI as well. So those numbers are important. And then we have Empire State Manufacturing Index. Also another thing we saw related to the US dollar was the numbers came in negative for the US dollar. And that's another reason where other things were positive for other currencies while US data was negative. So that had a negative impact on US dollar as well. Okay, and then going further in, SNB Chairman, Swiss National Bank Chairman Jordan speaking, anytime there's a central bank. So last time we had the ECB. So even though ECB meeting minutes were marked as orange, those are very, very important. So in my opinion, they should be marked as red. But anytime there is a central banker speaking, to me, that's a critical event because things could change direction very, very rapidly during that time, as we saw that with ECB meeting minutes. So Swiss National Bank Chairman speaking, again, if you're trading the Swiss franc, This will be important here. Wednesday, we have another central bank here, Bank of Canada. So this is an important announcement here. So over the last little while, we have seen oil go up. Oil's hit $70 before. It was struggling at $30, $40, $50, sitting at the $50 mark for quite some time. Now it's gone all the way up to $70, so which is good for the Canadian dollar. But overall, now, last couple of times, the Bank of Canada did not do an interest rate hike. They said they were concerned about the impact of the interest rate hike on the Canadian economy. But oil is one of the biggest exports of Canada. So if oil is doing well, that could change the central bank's mind. So Bank of Canada, their guidance here, basically their commentary will be very important. So here we are looking, if we take a look here, it shows that they are likely to raise the interest rate. And as a result of interest rate going up, Canadian dollar is likely to go up. So if they do raise the interest rate, Canadian dollar is likely to go up, which means dollar CAD is likely to drop. And it will have an impact on any of those Canadian dollar crosses. So keep that in mind. Right now, we are expecting to see 25 basis point increase in interest rate from Bank of Canada. So I would be very careful with that. Expect a lot of volatility in the Canadian dollar. And then at 11:15 a.m., we have the press conference. So market would be basically looking to see what the Bank of Canada thinks about future interest rate hikes and so forth, and what their commentary is. So if they say that they are happy with the pace of the economy and they think that the interest rate hikes are okay for economy to handle, or they're expecting economic growth in 2018, any of those comments would be positive for Canadian dollar. So that's really what we would have to keep an eye out for, or ear out for this one. Any of those comments will further push the Canadian dollar higher. However, if the central banks does this dovish hike where they say, well, we're going to raise the interest rate, but we are concerned about inflation, or we are concerned about the economy, all that kind of stuff, that could be negative. It could have a negative impact. So keep that in mind. But if they do raise rates, as we are projecting here, that will be positive for the Canadian dollar. All right, and then going further down here, we do have FOMC members speaking. But the important thing here would be for Australia employment numbers. So Australian dollar has done quite well as well. All the commodity currencies have done well over the last couple of months here. So if the numbers come in positive, this will be good for Australian dollar. So we can expect it to go up. China. So China, even though we don't trade Chinese currency, but China is a very strong trade partner with Australia and New Zealand. So if their numbers come in negative, it will have a negative impact on Australian dollar and New Zealand dollar. So just keep that in mind. Other than that, we have US data here. We have ADP non-farm employment change, building permits. So Philly Fed Manufacturing Index, all of these are very important numbers for the US. So we'll have to keep that in mind. And then going further down, we have oil inventories, again, because the oil has done so well. If this comes out negative, it could have a negative impact on oil or Canadian dollar as a result. So that's that. And then we also have European current account, which is the trade balance number, essentially exports minus imports. So positive number will be positive for euro there. And then we have retail sales for the British pound and consumer sentiment numbers out of the US. So all this data is very important. So multiple or couple of central banks here. So be mindful of the volatility as we trade this week. So let's move on to the charts. We'll start off with euro. So euro has now broken above this previous support and resistance level that it was struggling with. We have gone to the next level. So we haven't been at this level this is how impactful the event was. So if you take a look, this is where we saw ECB come in, and then there was a huge follow through the next day. So very, very bullish here. And as a result of that, we are bullish on this. That's a very strong candle close, because here it could have turned and gone down, and it looked like it was going down, but then it got pushed back up. So very bullish close for the day. I'm looking for further bullishness in this, looking for a 123.80 level, which is our next level over here. So but we do need to see a break here. So in this case, I would be looking for price to first test that level, break out first, do a back test here, and then do a further move to the upside. So the best level to look for would be price to break through, pull back, and then go up. Now, do keep in mind, we have had a huge move, a big move to the upside, which means we could see price come down first, and it could even come into this 1.2100 level. So in that case, the best long entry would be over here. I'm going to be looking for price to hold above this 12100 level and then go further up. But overall, the bias for euro is to the upside. But do keep in mind, every time we have these, or a lot of times when we have the huge moves, expect pullback. So that happens. All right, we're looking at pound US dollar weekly chart here. Again, a big move to the upside. It has turned quite bullish. As we see here, we haven't been at this level in a long time, and we still have that upwards momentum is still intact here. So now that we have broken to the upside with this one here as well, since Brexit, we haven't been at this level. So that's a major break of a level here. So in this case, the momentum is to the upside. So the bias is to the upside as well. The next level I'd be watching would be 138.50 level here. So again, in this case as well, that's a huge move to the upside. So it's best to look for a bit of a pullback and look for an opportunity. So I would keep an eye out at 136.80-ish level, or even lower into this level here. So 136.20 level, because we could see a pullback and then a further move to the upside. But overall, the bias is bullish for pound as well. Aussie here, Aussie has had, again, with everything else, Aussie has had a move to the upside. So with this one, I'm looking for a further move to the upside here. So 79.50 will be the target, but we could go higher here. So 80.50, so 0.8050 will be my next target. So here we are seeing a lot of bullishness here. All the candles are looking up, and there's still momentum. It looked like it may turn here, but with the news that came out this week, that has really pushed all the US crosses through the key levels here. So now with this one as well, I'm looking for a further move to the upside. 80.50 will be my target here. New Zealand dollar. New Zealand dollar is another one that has been pushed up. So with this one, I am looking for a further move to the upside. Biases to the upside here as well. Looking very bullish, very solid candle close. So the next target here would be 0.7400, which is back into this level here. So this previous level. So bullish on New Zealand dollar here as well. Dollar CAD, we had looked at this bearish pin bar the other day or last week, and we were looking for a drop. So we have seen that drop. And now if we do see interest rate hike, plus just based on the weekly candle close here, that's a very solid bearish candle close. So I'm looking for a further move to the downside. So 123.60 level will be the target to the downside here. And if the Bank of Canada is very hawkish, then we could even see a further drop. But the target here would be 123.50-ish level will be my target to the downside. So dollar CAD is bearish. My bias is bearish for that. Euro Swiss franc, with this one as well, we were looking for this top as the key level, and now it has broken through. So with this one, we have not been at this level in a long time. So we just need to go back a bit here so we can look for the next level. Okay, so 1.1830 level, or let's say 20, will be the next target to the upside. So 1830, which is not that far. So we'll mark one more target. So 1900. So those will be my two target to the upside. So 1836, 1.1836, and this next one is 1.1900. So let's say, so those are the two targets to the upside. The bullish trend is still intact, and finally we've seen it actually break through this level, and now it has turned with the euro, it has turned very bullish as well. Pound Swiss franc here, this one is still in the range. It hasn't been able to break below the range, so this gives us a bullish bias for this, plus the weekly close was bullish as well. So the next target here would be the next level here, which is also the high here. So the first level would be 1.3400, and above that we can mark the 1.3480. So those are the two levels to the upside. So 13400 and 13480. So the bias is bullish for this as well. As we can see, it has not been able to break the bottom of the range. So this is more of a range bound. As we can see, for the last few weeks, it has stayed in this range. It rejected the bottom of the range. So now we expect the move to go towards the top of the range. So bullish bias for that. Dollar Swiss franc, very bearish. We have seen price break through here, and now I'm looking for it to get to the next level, back into these support levels over here, which is 95.80, and even further down into 95.30-ish level. So the bias here is bearish for dollar Swiss franc, and 95.40-ish or 95.50, let's say, will be the level to watch for. Pound CAD, again, very bullish, looking for a further move to the upside. And in this case, 1.7290, so 17300, and then 17480 will be the targets to the upside. So bullish here as well. I'm looking for a further move up. Pound yen. Pound yen looking, let's see. So pound yen is starting to kind of push up here. It is, the momentum is still to the upside. So it looked like it was rejecting the top here, but with the bullishness that had come into British pound, this has gotten pushed up. So in this case, I would say the momentum is still to the upside, but I would be cautious with this till it breaks above this 153.60 level here. So it has to hold above. So in this case, we could see price come down, bounce off of the trend line, and then move further up. So this is the type of scenario that I am looking for. So a bit of a pullback and a drop into the trend line, and then a move to the upside. But before I turn completely bullish on this, we do need to see a break above 153.60 level, because otherwise this pattern here, the sellers are still sticking around. So they haven't actually, because we do have a red candle close here, so they haven't quite released the pressure yet. So we do need to wait for a break above 153.60. So first we could see a drop and then a further move to the upside, especially if the British pound stays bullish. So this could go up further. Okay, Euro yen, similar formation. As we can see, it had dropped and then it has gone back up with the bullishness returning in the euro here. So in this case, we are still kind of staying to the upside here. And as a result, we still have that bullishness intact, but I would be cautious with this formation here. It suggests that the sellers are still there. So in this case, we could see a drop like this and then a further move to the upside. So with this one, I think the first target will be here. So let's mark that. So first target would be 137.50-ish level. So 137.50 will be the first target. And then once the price breaks through 139 will be the next target. But again, I would look for price to come back and test this 134.38 level. And then once it stays above, then it may go higher. So I would be cautious with that one as well. So with all the yen crosses, we had a similar a setup where yen had actually picked up strength and price had dropped, but then it just it got pushed up because of what happened with all the currencies later in the week. So with this one, we do see a bearish candle close. So the bias is to the downside here because it has come into this resistance. And now we see a bearish candle close. So the target first one would be 8,700 here, and then 85. So 85.80 will be the next target to the downside. So Aussie yen, the bias is to the downside. Let's take a look at dollar yen. That looks very bearish. We were watching 112.00 level. It has done a clear break of this. So with this one, I'm looking for price to drop further. We could see a bit of a pullback, but 111.50 would be the first target. And then we could see a further drop here. So in terms of our targets, I'm looking at 110.50. And then 109 will be the next target. So the bias is to the downside for dollar yen. Last one, CAD yen. Again, bearish here. We have seen a rejection of this 91.50 level. And now I'm looking for a move to the downside. 86.80 will be the next target. To the downside here, looking for price to come down. Actually, let's say 8,700 here. So I'm looking for price to drop. So the bias is bearish for CAD yen. All right, so that's all I have. Any questions or anything else you guys want me to look at? All right, so if there are no questions, we will call it a wrap. And again, if anybody wants to join me in the trade room or you want to look at any of the courses that I have, then please feel free to visit tradingwithvenus.com/courses, and you can see the different courses that I have to offer. And if you're interested in doing this type of analysis with me every night, where we look at specific targets where price is likely to go to, you can join me in the trade room, and you can find that information at tradingwithvenus.com as well. All right, you guys, so we'll call it a wrap. You guys have a wonderful weekend and happy long weekend to anybody who's in the US. And I will see you guys next week again. Bye for now.